What exactly are you doing?
I'm hacking the FBI.
Hello everybody, welcome back to Stan's Garage. I'm usually here to teach you how to get the most of your technology. Today, I'll be talking to you about cyber insurance. For the most part, this is something you hope you'll never have to use. In the event you do need it, just paying the premium really doesn't relieve you of your responsibility in taking the necessary precautions in preventing a breach. Pretty sure you've become pretty familiar with the terms ransomware, its close cousin the phishing email scheme, and all the hacks that are going on out there. These are making regular headlines, and with incidents on the rise, cyber insurance should be a key component of your overall insurance strategy. A lot of you might think that's enough, but hold your horses there, people. Just having a policy might not cover you if you don't at least implement some standard cybersecurity practices of your own. Here are 5 tips that'll help ensure your cybersecurity policy pays off should you need it. So, number 1, get your cybersecurity house in order. Now, while this may seem obvious, cybersecurity should be a priority for your business. I can tell you that many times while pitching IT services to prospective clients, they told me they didn't really need to worry about a breach because they had cyber insurance. Well, I almost fell out of my chair each time, and my reaction wasn't great, right? You absolutely do not want to fall victim to a cybersecurity breach. This goes without saying. Regardless of whatever insurance you purchase, the amount of time and productivity lost due to a breach cause over 70% of businesses who fall victim to fail within a year of that breach. Moreover, if you simply ignore basic security practices, your insurer is probably going to deny your cybersecurity claim anyway. So every policy is going to have provisions that the business will need to confirm that they employ a degree of basic cybersecurity precaution. In the event of a claim, the insurer will verify that this was in fact the case. Now, if they find that you did not implement those security practices to which they had held you, they're going to have pretty solid cause to deny that claim. Number 2, know what's in your policy. Look, all these policies are going to be skewed towards the insurance company, as I'm sure you can well imagine. Get a good idea as to what your responsibilities are, what is actually covered, and what limits are in place. Policy will also highlight your responsibilities in the event of a breach. As we covered in the previous item, really want to make sure you're keeping up your end of the bargain, and just paying the bill is likely not enough. Bring on the services of an expert if you're not sure what you're looking at. A good insurance broker will pay for themselves several times over. You may also be covered in certain areas with other policies you might have in place. Again, your broker is the person to check with on all this. Property and theft policies often have some overlap, particularly if a cybercrime has taken place. Number 3, your policy may limit who you can hire in the event of an incident. You may have to pick from a pre-approved vendor list to assist with incident response if your insurer states that as a requirement. Much like medical insurance has their preferred network, cyber liability may as well. Policy has such a requirement. Going outside that network could be a costly decision. You might be able to go off the list if they give you prior approval, but it's definitely best to go and find all that out ahead of time. Consult with your insurer, agent, and double check your policy prior to committing to a costly consulting arrangement beforehand. Number 4, how you respond to an incident could affect how you get paid. Most cyber policies will require you to attempt to mitigate damages. What they won't necessarily do is cover those mitigation costs. This is another one of those things you need to make sure is specified in your policy. If you have in-house IT staff, we've seen previous claims on the basis of in-house staff being a normal part of operating expenses get declined. Despite your internal team having the most knowledge and ability to get things up and running faster than any third party, insurers may use that to still deny your claim. Another area where knowledge of your policy is key, and to be honest, it still doesn't make a ton of sense for either the insurer or insured to deny you using your internal staff and covering those costs. Anyway, number 5, your insurance company is in the business of itself first. I mean, let's face it, we all know that, right? You'd be best served to know your insurance company isn't looking out necessarily for your best interest. They really wanted to get out of this by forking over the bare minimum amount of cash to make this go away. Ideally, $0 or as close to it as they can get, and they'll do whatever is necessary to get to that number. Be careful of their recommended consultants too. As they count on the insurer's repeat business, this puts them in a questionable position to say the least. Best case scenario, you'll know your policy, do everything according to those terms, and your insurance will cover your losses and let you get back to business as soon as possible. Worst case, this becomes a long, drawn-out affair, and you have to spend a bunch out of pocket on experts to defend your position, and you really take a big hit financially as well. So again, knowing what's in your policy is key, particularly with cyber insurance. Prior to any of that, taking the proper steps to protect yourself and your business from a cyber attack really is the best case. Prevention is really the best cure here. Anyway, that sums up my top 5 ways to protect yourself in case you ever actually need to use that cyber insurance. I hope you never do, but know you at least have an idea of what to expect now. I'd love to hear your thoughts in the comments below. Please like and subscribe, and I'll catch you on the next one.